Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SHIYUE DAOTIAN interim report. The SHIYUE DAOTIAN Group Co., Limited offers a diverse range of products and services across various segments. These include rice products, prepackaged rice varieties such as Wucheng rice, Daexiang rice, long grain rice, and Kamachi rice corn products. Prepackaged corn products like yellow, white, black, and multicolored glutinous corn, fruit corn kernels, and dried and peeled corn kernels, whole grain, bean, and other products. Prepackaged mixed brown rice, millet, red bean, sesame and corn and seed products, dried food, and other products. Prepackaged wood ear mushrooms, snow fungus mushrooms, lotus seeds, lily bulbs, bran, husk, and fractioned rice. In addition to these product offerings, the company also provides investment activities, technology services, e-commerce platform sales, online self-operated stores, modern retail channels distribution, network direct-to-customer sales under brand names SHIYUE DAOTIAN, Firewood Courtyard, and Sunshine Family. The significant drop in SHIYUE DAOTIAN's stock price over the past year can be attributed to several key factors. A substantial loss from an investment in Baicha Beidao, a bubble tea chain, was a major contributor. The company spent 360 million yuan on Baicha Beidao shares, which plummeted by 38% on its first trading day and remained weak, resulting in a 160 million yuan loss. Additionally, despite reporting a return to profit in 2024 and strong sales in its corn products, the overall stock performance has been lukewarm since its IPO. A single-day plunge of 33.91% in SHIYUE DAOTIAN's stock further exacerbated the decline. These factors have collectively contributed to the company's stock price losing nearly two-thirds of its value since its IPO in October 2023. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown due to increasing demand for convenience and brand products, particularly among Chinese consumers. Emerging trends such as wellness-oriented consumption, domestic brands, and elderly consumption have also contributed to growth. The company's robust multi-channel brand presence, premium prepackaged rice and corn products, and well-recognized brands have further boosted sales. Revenue decline drivers. On the other hand, revenue has declined in certain areas, including corn products, -15.6%, modern retail channels, -20.4%, distribution network, -23.6%, direct customers, -42.9%, selling and distribution expenses and administrative expenses. These declines are largely due to adjustments made by the company to enhance profit quality and optimize marketing strategies. Net income and profit margins have undergone significant changes over the years. Notably, net income increased by a substantial 97.7% from RM 100 and 48.9 million to RM 100 and 94.3 million due to strategic adjustments in product portfolio. The company's focus on mid to high-end products has led to rising sales volumes and higher profitability. Profit margins have also improved, with gross profit margin increasing from 17% to 21.8%, net profit margin rising from 5.7% to 9.6%, and operating profit margin growing from 6.3% to 10.1%. These improvements can be attributed to the company's decision to reduce investment in low-margin products, allowing for increased contribution from mid to high-end products. While there was a brief exception where net income decreased, the overall trend indicates a positive shift in financial performance. The strategic adjustments and focus on high-value products have contributed to this growth, positioning the company for continued success. The company's financial performance indicates a positive trend in its operating cash flow, with net cash generated from operating activities amounting to RMB 638,835 and operating cash inflows reaching RMB 1,479,607. It is clear that the company is successfully generating positive operating cash flow. This suggests a strong ability to manage its finances and generate sufficient funds to support its operations. The company's financial performance has shown a notable improvement in its debt level and interest expenses. Specifically, finance costs have decreased by 23.8%, while interest expenses have also seen a significant decline of RM 8.2 million and a reduction from RM 13,270 to RM 5025. Furthermore, bank loans have decreased by 69%. However, financial liabilities measured at amortized cost have increased significantly. Overall, these changes indicate a reduction in the company's debt burden and interest expenses. The company has a history of paying dividends to its shareholders. In fact, a significant milestone was achieved in the previous financial year when a final dividend of RMB 0.164 per ordinary share was approved and paid out. This demonstrates the company's commitment to returning value to its investors through regular dividend payments. Concerns about inventory buildup exist. The financial summary reveals a notable increase in raw materials inventory by plus 87,658 units. This significant jump raises concerns about potential inventory buildup. In contrast, the work-in-progress and finished goods inventories have decreased, indicating some level of production efficiency or reduced demand. However, the substantial rise in raw materials suggests that companies may be stockpiling materials, which could lead to future supply chain issues if not managed properly. That concludes the financial summary for SHIYUE DAOTIAN. Feel free to comment below, and I will be happy to answer them when possible.